Welcome back. This is Jacob Milliken, the owner of 9M Investments. And today I'm going to go through May's private performance. So, jumping into the numbers here, from a performance standpoint, Blackstone's REIT was up 0.67%, up 3.4% year to date. Still very strong dividend of 4.6%. Nuveen Global Cities REIT down a little bit in May, and again, still down on the year, negative 1.47%, and a very strong dividend at 5.41%. You have to remember with both of these dividends, especially when these investments are used in a taxable account or individual account, these dividends are 100% tax free with the Global Cities REIT and 90% tax free with Blackstone's REIT. So, a huge advantage on these dividends. Blackstone Private Credit was up 0.4% on the month of May. Now, year to date, up over 5%. Again, dividend at 10.2%. Very, very strong dividend. Carlisle Tactical Credit, a fairly new member to the crew, 0.27% in May. Year to date, up over 5.2%. And again, almost 11% on that dividend. And then the newest member to the group is iCapital's, or this fund is actually called iDirect Capital Private Markets Fund. But iCapital is the underlier of the fund, and what they've done is taking three major powerhouses, so Vista Equity Partners, Warburg Pincus, and KKR, and combine this in an investment for investors where they can pick and choose the best deals amongst these three partners. So what you get with this fund is kind of the best of the best from three different powerhouses. It really gives you some nice diversity across names. And again, from a private standpoint, again, these are all going to be private companies, giving you that asset allocation differentiation from the public markets. Um, you know, how did the public markets do in May? S&P has been up and had a great run so far this year. The month of May was only up 0.25%. So if you look at it from a performance standpoint, somewhere kind of in the middle with all the different private types funds. The Nasdaq 100, on the other hand, had a monster month, 7.6%, and the ag was up right in that kind of that middle range as well from a performance standpoint. The ag is up 2.65% through the last week or so. So again, why do you have these types of investments? Consistent performance, with the private credit space, really taking advantage of those higher interest rates, and that have pushed these dividends up to high levels. And so we want to take advantage of that in the markets that we are. These aren't all your investments. We still want to have that core. So we still want to have that core of the S&P, still want to have that core of the NASDAQ to take advantage of these months. But when these types of markets are down, having this consistent month-to-month performance is really why we do that, and kind of help differentiate your portfolio where not everything's moving together like we learned last year, where bonds and stocks can go in the same direction. Unfortunately, last year was the wrong direction. So anyway, any questions about your portfolio, how these investments could help your portfolio, please do reach out. Anyway, we'll talk to you next time. I hope you have a great rest of your June.